Good morning. Let's get rolling here. All right, so gigantic gap up yesterday. Wow, wow. We were all saved from the coronavirus. So how timely it was. So now we've got this big, and I'm starting with the S&P cash here. We'll look at the futures. But, this is what the world pretty much looking at, what they measure the markets and what's going on if they're looking at charts. And we got this gigantic topping tail. Not only is it a topping tail, it's a range expansion bar, which increases its potency as a topping tail bar. In other words, we could have a topping tail bar like this one here, which occurred after coming off of a low and a pretty sharp move down into support, and then you had this igniting wide range green bar up, negating the red one. So we've got a reversal pattern here. And so a topping tail like this, which is smaller or narrow in range versus the bars that precede it, and this was coming off of a low, we sure would look at that and say, well, possibly we get a retest and reversal kind of a pattern since it was down so much. That didn't happen. It went sideways. It produced more bullish price action. Now, the bar that we have here, came after running from the bottom of the range, and then, of course, on the news, explodes through the top of the range, and sellers showed up slowly at the beginning. And then in the latter part of the day, as you could see here, the realization that, the troops weren't coming to back up to hold the line, they just threw in the towel. Now we're going to see what happens. So one bar doesn't change a trend. This is new all-time highs. We have to respect that part of it. And now we've got this unfilled gap below. The assumption is it would go down here, and somewhere in this area, give or take, we'll see where prices begin to hold. And so now that it's moved that far, we have to look at retracements. So everything we do is based on multiple concepts of doing the analysis objectively. So we've got one big ominous topping tail bar after breaking out to a new all-time high. So it failed to hold, which isn't unusual after a run like this. It's not as as ominous as it would be as if it went sideways for, say, 4 to 6 days, broke out, had a giant range, and came back in again. This is more of what is not expected, but it's not surprising to have this result. And we'll see how far this now takes things as far as some type of corrective price action. You can see the hourly is still in an uptrend. It's the unfilled gap here. You got a nice little base here that was occurring on these 2 days there last week. So moving below those lows would be something of significance, of breaking the trend on the 60-minute chart. And then, of course, step by step. Now, with a move like this, it's created this big void below. These little shelves aren't going to mean a whole heck of a lot as prices move down. So I guess it's a little bit better than just having skyrocketed straight up. In any event, as it pulls back into this area here, wherever it's going to be, buyers need to step up, because that's what happens after a move like this. And if they can do that and stabilize the markets here, now that suggests that there'll be an attempt to move up to the old highs, and end of year, Christmas rally, so on and so forth. We'll see how that all plays out here. So we've got an initial big bearish bar. We've got unfilled gaps below because of the way things went up last week was pretty crazy, with those big gaps in continuation. So again, we'll just see. I think from trading opportunities, as we look at individual charts, as we get to tomorrow anyway, figuring that this bar isn't going to be, the high isn't going to be taken out. A call spread, 0-day to expiration call spread should be a no-brainer if there's premium up there tomorrow, give or take. And of course, we'll see what today brings. Not much to say about the weekly time frame. You had this big reversal bar, and we'll just see what happens. So what we do, right, we call our factory work, is we got that green bar. Ideally, a move like this, the most ideal, it wouldn't even fill the gap, right? And we would recognize that as being incredible strength not to do that and go sideways this week. But what we want to see, just like looking at here, saying, well, as it comes down here, buyer should step up. Well, we look at a big wide range bar like that, and any retracement into that, the ideal would be for it to stay in the upper third on any type of a pullback. So just call 3,400 on SPX as a level that you want to see prices to stay above to hold this picture intact. We'll see how that plays out. I'm going to look at the cues here just to, and so obviously much more bearish. Not real damage done, Tony. So I'll go back to that just to answer your question. I think it's an important one. When we look at a candlestick pattern, right, we get to see the open, the close, the high and the low, and especially when it's a big range like this, it looks pretty ominous. And it is. But as I explained, it can survive that. Now we have to really see this power move that occurred. Does demand still come in? Or was yesterday just, sort of a normal type of profit taking that occurs after a move like that in a huge gap? So to see a sell-off on a day like yesterday is really normal. Now, is any damage done? Well, in reality, no. And the reason the damage wasn't done, and the way I always tell people, students to look at this is, well, visualize it on a closing chart if it was the close. And what you have is a move up. Damage is done by the failure of prior bars, prior signals failing. Nothing has failed yet. So and that's why I talked about retracements, because this has got this void. There's this little shelf of support. I said, the top of this base here, what we call minor support, and these two bars. So it's not much. If it can hold here, that's a positive. However, and you would say, okay, this is common sense. If we see prices retrace all the way back down, and at the end of the week, we have a breakout and a big red bar that's closing at the bottom here, and what Dan would call, and this would be red, Dan would call that a bull sandwich. So if we saw that pattern at the end of the week, you wouldn't be asking me the question. You would know that a lot of damage was done. But right now, more uncertainty has been created in a market that is just crazy uncertain. So we'll see how far this goes. I hope that clears that up. Right. The NQs, right? They started out a little weaker and it continued. They broke through support. That is damage. That's damage being done here because it's a giant range expansion red bar that took out the lows of those two prior bars. It peekabooed above this, but it held support. So if we look at this chart and we look at the close, all right, not up here, we're forgetting the ranges, all right? We've got a big inverted hook. Let's just call it an inverted hook that held support. What happens today? Where is it? 282, 285, 282. So it was down here. That's damage. 285, it's over here. So we're starting the day here, in an area of a little bit of support. Let's see, 283-ish, 283, 280. Yeah, this little area right here. Not much to go on. So is this, and you can see now the breakout failure and now the move down. This has gotten a bit climactic, as it's come down here. So of course it found some buyers, and the type of trading is erratic. I don't know if these are bad ticks, but let's just call it erratic, as it's trying to hold this level here. So as this week progresses, if we find that the cues are down here, technology, which is led the way up, that's a bad sign for the market, right? Ignite. Well, you can't really. It could be, Tony, and the reason I'm hesitating to call it an igniting bar, because it's in a trading range. It's a big red bar. It's a powerful bar because of the size of it and the gap up and all of that. But prices are in a trading range here. So when we look at igniting bars, we're looking at something that is breaking out, right? Or breaking down. And you say, well, now it's broken out into a void, or it's been bottoming out for a while and it breaks out and it ignites the move off of the void. So we'll see. So let's take a look, rotating into the Russell. The Russell has had this history this year of moving opposite, a lot of times intraday, of the spiders and Qs. Yesterday, it had that limit up and it started trading. We shorted it in the morning, did okay with it, and it began to stabilize. And as you can see, it rattled around before it went down again. So it moved up. Let's see, was it all-time highs? Yes. And now we're in the same situation. I don't know about rotation. We're just going to have to see again how far this retraces. You've got that top of the range that prices cleared, and that's where buyers are going to show up. In the ideal scenario in this type of situation is we'd like to see it go down there fast. Get down there, hit the support, buyers show up. Let's see if they can turn it around. And look, black and white objective analysis without any of the, indicator, brain damage, common sense stuff is what we do here. The move started up here in the morning. If at the end of the week, the closing price is down here, no one is going to be questioning if there was any damage. So we look what's to the left. There's support here. Does it hold? Or does it keep going through it? How does it go through it? Does it go through and trend through it slowly, which would lead us to believe or have a bias that this low would hold? Or does it cut through it like a hot knife through butter, which says sellers are saying, get out of this market now. And buyers are stepping back and saying, I don't want no part of this. And so we don't know. Right now, again, do the same thing. Visualize this on a closing basis. Had a little dip. Well, it didn't go up there, and it's up here now. And so it didn't fill the gap. If at the end of the week we have, let's just call that a bottoming tail bar as I'm trying to draw this here, maybe a gap down and reversal, and it's doing this in the latter part of the week, we're going to have to respect that as strong demand, that it won't go down here. So, where was it this morning? Overnight. It went to 169. Not bad. It's at 171 now. So far it's holding that area. Everything's telling us that we need more information from a swing trading perspective and where this market's going. So we just need to see how much damage actually gets done this week. We all know there's going to be more news coming, about this election thing. And that is something that could really make things go crazy, depending on what comes out. All right, let's see the futures. And yes, it's crazy already. I think, Gustav, I don't know. I think that I said this to my wife the other day. I think if you believe that there's criminal things going on here, I think if some people are walked around with handcuffs, people are going to start talking, because you know what happens then. I don't want to go to jail. Someone has to start talking. Anyway, we'll see. All right, so big move up, big topping tail, and it's a better display of what happened. Of it's up and it's going sideways. The tail, there was this reaction to the giant gap up, or where it started the day. Again, which I said is not surprising. The gap up wasn't normal, but we had this big news event. So let's call it all normal, and the reaction to it was normal. Obviously, more damage done. It poked above the highs. It's coming in. But maybe just it forms some type of wild trading range up here. As I said, whether it was yesterday or last week, we do different lessons in the green room. And of course, in MT Live, which is tomorrow, which is going to be a good one. When you have such extreme range expansions, I think I spoke about it in the newsletter, the video. When you have these range expansions that are so extreme, the ranges have to contract. So you've got this gigantic move. And from the bullish point of view, what will happen is, now that this is already pulled back a little bit, it'll begin to rattle around up here. You see these smaller bars? This was going down, right? Traders are somewhat confident. It's getting sold into on the way up, but it begins to stabilize, and the ranges and bodies are small. Here, the ranges and bodies are huge. So what we need to see is a return to what's normal recently of ranges that begin to contract. And when ranges begin to contract, what that communicates is that the forces between supply and demand are beginning to equalize. And when we see that, that is where range expansions can start again. And they typically do that in the direction of the prevailing trend. So right now, the prevailing trend is sideways on the weekly and daily timeframes. So if it stays up here, right, part of the assumption is that it could break out when it begins to contract. And this is what things like Bollinger Bands and these different types of, whether they're envelopes, different things that look at price action, that where they contract, that try to communicate to you, what's happening in the prices. But if you understand the price action, which is so much more simpler, we don't need to put all that stuff on your chart. All right, let's continue. It's getting late here, but you guys got where we're going here. Right, that doesn't look bad. Forget the tail, it's moving up. YM, right, that doesn't look so bad. Just wild range expansion. We need to see things settle out. Bonds going back down, which means interest rates are going up. That's a good thing. Oil came off of the low and reversed back up. That's a positive. We'll see what the reaction is to the resistance. Gold fell out of love yesterday, big time, but held support. A lot of wild price action going on here. Silver, same thing. And the transports, cruise lines and all of that, but people sold it. So we'll just have to see how things evolve here over the rest of the week as to these moves. Do they completely fall apart? Do they hold here? I guess my best advice is do your day trades, pick the best of what you could see on swing trades, so the patterns are more recognizable. And I would think that bear call credit spreads probably should be pretty good trades probability wise. So all yours, Dan.
Yep, I was going to say the same thing. Yesterday, those big gaps are very hard to trade, at least for swings. So yeah, day trading yesterday and bear call credit spreads. I did look to try to do, and we did a 0 DTE on the spiders. And I did say if we close weak, then I would do another one for Wednesday. And I did look, but there was no juice at the time. But Q's weaker. Let's keep an eye and see if we can get over yesterday's high for Friday, if there's some juice there. Kramer, I told you I like his commentary at least in the mornings, and he was this morning saying he's kind of agreeing with what we're saying, but using a fundamental twist to it. He's like the junk stocks value went from undervalued to overvalued in an hour. He says you can't trade that. That's ridiculous. And that's the problem with all these junk sectors. Hey, Greg, another interesting thing I heard on the TV, I meant to ask you. They said the stay-at-home stocks now went down yesterday, right? So Zoom is on my short watch list and bear call credit spread. But they made a comment saying that the buys to sells was 5-1 on the buy side. So the only way that is mathematically possible, I'm just using common sense, is if the volume of the sell orders were dwarfing, the small little whatever, Robinhood people trying to buy, and they're counting the multiple orders of buys versus sells. But I thought that was an interesting stat. Yeah, we have two problems on our hands today. Apple, I set into the close. I did not like that close at all. It did not hit our stop on the put spread. But we were saying it doesn't look good, and there was gap risk to it. So it's gapping down a little bit, and we'll just use a 30-minute low. Beyond, we had a way out of the money 124 put down here, purposely holding into earnings yesterday into strength. I closed out half at 50%. And now it's getting whacked. I mean, that's a nasty gap. It's over 2x the expected move. Typically and historically, statistics favor shorting options into earnings, but we don't do it 99% of the time for this exact problem. You're gonna have pain on your hand if you get a big move greater and it goes through your short strike. So this one's going to be our problem. We'll consider legging into an iron condor also, like with Apple. The other opens are all fine. And, that's the risk of wanting to sell options into earnings. I got a big list here we can look at. Disney here, with yesterday was just the rotation into the vaccine thing. So junk was going up, same old story. The media just puts an idea in people's head, and then they just, like robots, oh, okay, it's time to buy these beat up travel stocks now. So Disney was a beneficiary of that gap. Today it's gapping under yesterday's low, which suggests continuation into the gap. I was also hearing on the news today about the Pfizer vaccine. When I was listening to the news yesterday, I just thought it'd be like a pill or a shot or something simple, that you would take a vaccine. Here, take your vaccine, call me in the morning, take it with some orange juice maybe. And then, oh, is that what it is? Okay, so I don't know what I was listening to then this morning, but they were talking about having to go to the hospital, having a 2-hour transfusion, then some other 2-hour period, and then they were saying 5 hours at the emergency room. Well, not emergency room, but the hospital. I'm like, wow, that doesn't sound like fun. I'd rather take a pill with orange juice. This one, somebody in the green room found this for us yesterday into the close. And I said, yes, this looks like a definite bear call credit spread candidate. Now we have conflicting time frames here. So it's in a wide trading range. It broke down last week, but then it had 100% retracement, which is bullish. That's what's creating this 180 reversal on the weekly chart. Wide range red bar, wide range green bar. The monthly is a climactic sell setup, and it could be in the process. Oh, sorry. So yeah, I was just talking about conflicting time frames. Sorry, Sam, your drop down. So we got a wide range bar creating 4 areas of resistance. So we can put the money on the line of selling it out of the money call spread. But I was just saying weekly was a bull 180 reversal, and the monthly could be in the process of a bear sandwich after climactic sell setup. YouTube's asking about Levi, maybe day trade. Yeah, it's in a trading range. Had the gap up yesterday with the market. Yeah, possibly 15-minute high. It's gapping up here towards the upper part. Well, actually, right over yesterday's high. So yeah, that's a watch. You got to put it in a little window. Put it in a little window. I'll put it here, and you watch it. But as of right now, I'd say yeah, maybe 15-minute high. And let's see, there's some other questions here. Snow credit spread, Tim, Xerox. We looked at snow yesterday. Yeah, if it's snow breakdown, yeah, you can do a bear call credit spread. Just eyeball and maybe here the 280, 290. But historically, he has been spready. And it's perking up a little here pre-market, so maybe 15-minute low or under some of these pre-market lows. Just check the spreads. Xerox, yeah, is on my core long list. It's a breakout daily, weekly, monthly, but like many things, they're far from the 20. So ideally it takes a couple days, maybe a week or two to give us a lower risk entry on the daily chart. Now you could, somebody asked me in the green room, well, can I buy it as a core yesterday? I'm like, yeah, go for it, but the stop is last week's low. So that's the problem you got. Is your stop when the daily is extended. All right, we're still short this thing from yesterday. Looks good. We're short BBBY, a 2/3 lot left. Khaled, it's the fastest moving one, right? So it's blue. It's the fastest moving one. Tom's asking about call spread on Apple, 128. Yeah, under pre-market lows, we actually have a put spread that went against us, and I will consider legging into a condor, but it's rallying right now to the gap fill. But it's a definite idea. Sure. All right, Q's gap down, and breaking out of the pre-market consolidation. Spiders, I think they're headed for the gap fill. Diamonds. And Knox, it's holding. You know, for me, there's no pattern to want to put my money on the line right now. DKS, Gary. Yeah, continuation. That was a nasty gap and crap yesterday. Maybe 30-minute low. I'm not rushing into anything here, but 30-minute low, sure. DLR. That was a big percentage yesterday. And Gary, I'm assuming you're wanting to go short, but it's so extended here. Again, I would maybe 30-minute low or a bounce. Look at Zoom here, I have in the bottom right.